Hey everyone, I had a subscriber request asking me to compare Pinterest with Snapchat and answer which one is the better social media stock to buy today. So that's what I'll do in this video, compare these two on several critical metrics important to determining the valuation of these two investments, and I'll determine which one I think is the better stock to buy today. So let's get right into it.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/parkev for the 10 best stocks to buy now.
All right, so one of the more important metrics to consider when you're evaluating social media stocks like Pinterest and Snap is the monthly active users, daily active users, just how many people are using the app and the growth in this metric. So for Pinterest, in its latest quarter, it increased monthly active users by 11% compared to the same time last year. And you could see very nice growth here for several consecutive quarters, growing from 450 million to 463, 465, 482, and finally 498. So solid consecutive quarterly increase for Pinterest and solid increase in the number of users from the US and Canada, from 95 million to 96 to 97 million, and also solid growth in Europe. We're going to see in a little bit why that's important to generate user growth from Europe and United States. Now, for Snapchat, the company also increased average daily users. This metric is a little bit different. Snap is reporting daily active users, where Pinterest reports monthly active users. You're always going to have more monthly active users than daily active users because it's harder to get people to log on to your app daily than it is to get people to log on to your app once every month. Still, comparable growth here, right? 10% increase, 414 million for Snap, and also demonstrating solid increase, 5 consecutive quarters increasing average daily users. But the devil is in the details here. For Snap, you can see from North America, they actually experienced a decrease in the number of daily users from 101 million to 100 million in its latest quarter. So 1 million decrease here, where Pinterest reported a 1 million increase. And then for Europe, they only increased by 4% year over year, where Pinterest increased 8% year over year and 7 million in the most recent quarter. The majority of Snap's growth came from the rest of the world, 19% increase year over year. And here's why that's important. If I show you the average revenue per user, you can see for the US and Canada, it's $8.07 for Pinterest, and for Europe, $1.23, where for the rest of the world, it was only 15 cents in the latest quarter average revenue per user. Those folks from the rest of the world don't generate as much revenue for Pinterest and Snap. The average revenue per user for Snap was $8.96 from North America, $2.49 for Europe, and only $1.03 for the rest of the world. So for both Pinterest and Snap, you can see the average revenue per user is significantly higher in North America and Europe than it is for the rest of the world. That's why it's critical to pay attention to where the user growth is coming from. And in the latest quarter, it was more so from the US and Canada and Europe for Pinterest and less so for Snap. But I want you to understand the total addressable market for advertising. According to Statista, global advertising will amount to $874 billion in 2023. That was up by 6% from $826 billion in 2022. Their estimates suggest this figure will surpass $1.1 trillion by 2028. A growing share of that spending is moving to digital channels like YouTube, Google Search, and Instagram. Digital advertising totaled $522 billion in 2021 and is expected to reach $836 billion by 2026. It's understandable that digital advertising will grow to take a larger share. This type of advertising can be more targeted, focusing on a specific group in the population, like 22-year-old male college students or 34-year-old females with children. It's also easier to measure the effectiveness of digital advertising. How many people clicked your Amazon advertisement and made a purchase? That would be informative. The companies that will benefit from this trend include Alphabet, Meta Platforms, Netflix, and Pinterest. Additionally, companies with popular websites like Amazon, eBay, and Walmart will benefit as marketers will seek to influence the purchasing decisions of shoppers. Okay, so now you can see the opportunity in this market for both Snap and Pinterest, which generate primarily all of their revenue from advertising. If we look longer term at their revenue, Snap and Pinterest have grown their revenue nicely, but Snap has demonstrated better revenue growth over the last 5, 6, 7 years, more so than Pinterest, although in the latest few quarters, Pinterest has done a better job. They've also both demonstrated solid improvement in profitability, where it's stagnated in the last 2 years for each of these two, -4% for Pinterest and -30% for Snap in terms of operating profit margin. But I want you to understand the difference between operating profit and cash flow from operations. Cash flow from operations is one of the most vital metrics I consider when making an investment decision. If any financial shenanigans are happening, looking at this metric can help uncover the fraud. Moreover, looking at profitability without considering cash flow from operations can lead to a misleading picture of a company's performance. For instance, look at the example I have created here. The company reported a net loss of $250. However, when you look at the cash flow from operations, it was a gain of $35. How can that be? Well, two expenses a company must report on the income statement are depreciation and stock-based compensation. Importantly, these are non-cash expenses. Money is not leaving the company for these expenses. In the case of depreciation, when a company buys a machine for $750, it pays all of that price up front. However, generally accepted accounting principles require that the company take the expense over a period the machine is expected to operate. So if the machine is expected to last for 10 years, the annual expense will be $75 per year for 10 years, even though the company paid the $750 cash at the time of the purchase. Also, when a company offers its employees a stock option, it's not parting with cash. However, it must record the cash value of the option as an expense on the income statement. So moving on to the working capital items, inventory management is the easiest way a company can increase cash flow. The simplest case is when a business has 100 inventory units, sells 30 units, and doesn't replace those units. The decision would reduce total inventory and increase cash flow. As you might already be thinking, this isn't sustainable. Eventually, the company will deplete all its inventory and go out of business. Accounts payable is the money that a company owes another company and has not paid yet. And accounts receivable is the opposite. A company can increase its cash flow by collecting payments faster and paying suppliers slower. If done with skill, companies at scale can take advantage of these timing differences to boost cash flow by a couple of % annually. Costco is one example that employs this strategy masterfully. Overall, if you observe cash flow increasing unsustainably, you should expect a reversal of that trend. The other big risk to consider is if you see a company reporting substantial profits but negative or weak cash flow due to rising accounts receivable. Okay, so now that you've got a handle on that metric, you can see here that these two are both positive in cash flow. 20% for Pinterest and 5.35% for Snap, but you can see the much more significant improvement Snap has demonstrated in this metric over the last several years. So while Pinterest is better than Snap on this metric, Snap is making better progress on this front. And finally, when I compared their valuation, Snap is more than 50% more expensive than Pinterest, trading at a forward price to earnings of 31.68 compared to just 20 for Pinterest. Now, this has narrowed recently. This is the closest valuation you've been able to get Snap compared to Pinterest. Typically, Snap trades at a much more premium valuation to Pinterest, but the headwinds in the recent quarter, where Snap demonstrated worse growth in US and Europe, where Pinterest demonstrated better growth, has closed that gap. However, if I had to choose which one of these two to buy today, I would choose Snap. I have both of these stocks rated as a buy, but I like Snap better than I like Pinterest at current valuations. If you liked the video you just saw and you want to see more just like it, please subscribe to the channel. I can't keep this channel free without the support of viewers like you. And if you're already subscribed, thank you, and I appreciate your support.